Hello everybody, this is John Hardy, Associate Broker with Coldwell Banker Realty and owner of JO Homes. Along with me is Luke Hamlet, loan originator with Supreme Lending Elite Team, and we are bringing to you another monthly real estate market update. This is the month of March, the last month of Q1, and now we have a little bit of stats to look at and what we see going forward. So you ready?
I'm ready. Let's do it.
All right, let's do this. What have we been seeing in the market? Well, as last month alluded to, we had a lot of sellers come into the market right out of the gate. They're like, all right, New Year's, we got New Year's resolution, let's buy some houses, right? But the sellers really weren't ready. There were homes coming on the market, but not near as much inventory as we'll see hopefully in Q2. And that's kind of set the pace for what we're seeing right now. Now, we'll get a little more into this later, but we don't expect that it's going to be the 20-25% appreciation that we saw last year. However, the numbers are showing a little interesting data from what you typically expect. Now, to get into those, Dallas County has seen an appreciation of 6.9%. That's the end of December through the end of February. So 2 months, 6.9%. Collin County, same time period, 2.7%. And then Denton County, 7.3%, and Tarrant County is 3%, right? So what we're finding is places with Plano, and I'm making assumptions, but places with Plano and Frisco that really drive a lot of demand, and we saw the numbers shoot through the charts last year. Southlake shot through the charts last year in Tarrant County. Those areas now have been elevated to such a rate that people are looking elsewhere, right? And Denton County and Dallas County didn't see the same numbers last year as Tarrant and Collin County. Therefore, I think it's just balancing out a bit. But in Dallas County and Denton County, we're looking at around 7%. In Collin County and Tarrant County, we're looking around 3%. And I believe my assumption is that whenever more homes come on the market in Q2, we'll see this balance out more. But another question besides what's my home worth that you're bound to want to know is what is going on with interest rates.
That's $1 million question. So for the most part, just like we talked about last month, rates in general have been moving up. Now, every client and family that I talk with, when we have a trend that isn't forecasted to really change, I always tell them there's one thing that can really impact that and change the trajectory. And it's something massive and typically something worldwide. We saw it with the pandemic. We saw the rates drop when we were in the low to mid fours. We saw them drop into the ones and twos. Another thing that can disrupt that is war. So what we see right now going on in Ukraine with them and Russia, we are seeing that impact our rates. On Monday and Tuesday was the first time in weeks that I actually saw improvements to the rates. Now on Wednesday, we took a small step back. The Dow was doing good on Wednesday, but overall, rates in general still moving up. Like I said, we had 2 days. We may have some more of those in the future, but overall, rates are still going up. The Fed is still going to raise the rates. We still don't know what they're going to do. Some people think maybe a 0.5% hike. I personally hope that it's only a quarter. But the news is that it's going to happen. What we see in Ukraine and Russia is not going to prevent them from raising the rates. So that's something, again, like we said last month, if you're on the fence, now's the time. You got to get off.
That's true. The best time to get into the real estate market was yesterday, right? So earlier this week, we saw a little, indecisiveness of what was going on with the market, kind of helped out interest rates, and who knows, you could win the lottery and lock it in at the perfect time whenever it goes down because something crazy happens in Ukraine or somewhere else, right? Not to get political, but just moving forward, the housing market is going to stay very competitive this year, but we do think it's going to balance out, at least to an extent, kind of solidify our new normal. And as Luke and I both, we have economists that we talk to and consult with and kind of educate us more than you might find on a news channel. And we're all expecting that this year kind of becomes just a new normal. Instead of being just crazy energetic, we're gonna really kind of just calm down and get more comfortable. Yet there are tons of people moving here, very little people willing to leave. And, so it makes the inventory and supply and demand issue a pretty touchy subject. Now, whether you're looking to buy in the future and you just want some information, or you're looking to buy this summer now, it doesn't hurt to get the stories, get the information and start looking at what your options are or what you need to do to get there. So that's what Luke and I do, bringing you this video. And, we both made our careers on doing right by our clients. And a lot of that has to do with education and expectations and preparing you for success, no matter what your success looks like. And are you ready for this big news? I guess we have been putting some ads out on social media and stuff, but this isn't the only thing we're bringing to you today. At noon, we'll be doing our first home buyer Q&A of the year, and that'll be on Zoom. So no matter where you work, no matter what your lunch plans are, if you have a business lunch, just tag them in it, and pull it up at your restaurant table. But it'll be a great opportunity, very casual. You can eat while you're on it. And it's pretty much just an open floor plan kind of style and no big presentation, just to answer your questions. So we hope you'll tune in. There'll be a QR code following this. You think there's anything we left out?
You touched on it, but aside from what's the rate, one of the most common questions that I get is, when do I get started?
Yeah.
The sooner you get started, the better. We're going to have a conversation. I'm going to do everything in my power to protect your credit. A lot of people are concerned with having their credit pulled. Good problem to have. Good to pay attention to it. But the sooner you can get started, the better. Like John said, that's going to allow us to look at the credit. If there's anything that we can do to maybe fix the credit, maybe you've got some bumps and bruises, maybe your credit's in pretty good shape, and we can work on it a little bit to make your offer even stronger when you go to make that in this crazy market. So get started early.
Yeah,
so
for sure.
We'll talk about more of that at noon on Zoom.
All right. Thanks for tuning in, everybody.